Bernhard represents 21Shares. And what I find super interesting about Bernhard is we've met actually a couple of years ago. Back then, Bernhard was working for one of the really largest asset managers in the world. And now he's changed or switched to a crypto company. And to me, that is like also a sign, right? All of the people at the big asset management companies, at the banks, are slowly but surely also moving to that direction. Bernhard will talk about the state of crypto and whether crypto should be part of an investment strategy. Bernhard, thank you very much for being with us. The stage is yours.
Thank you, Sani, and thanks for having me. Good afternoon. Good evening, good afternoon. Well, it's true, I came from a large asset management company with stationed global advisors before, but before that, I was in the gold business and looking into gold-structured products. So I come from the commodity side, which we heard, I think, in the panel just before, that Bitcoin is also something that might be similar to digital gold. So it's something that also resonates well to me, and I hope not all asset management people will come to crypto, as you said, but all are becoming aware of that crypto will and should play, I think, an important part in an institutional portfolio and also in a private client portfolio. And I want to talk about today a bit about the role of crypto underlyings when compared to other asset classes, traditional asset classes. And then also, we are an ETP issuer, 21Shares, also some efficient implementation possibilities and structures via ETPs, which is a form of issuing cryptocurrencies similarly to ETFs. It's just not possible to do it as an ETF in Europe, but I come back to that later. To start off with, maybe a couple of words on 21Shares, and also my colleague Sina Meyer is here today. And Jasmine, our new colleague who just joined us yesterday, is here, and we are representing 21Shares. We are, like I said, a crypto ETP company issuing crypto products. We have now 3 years old, nearly 4 years. We have approximately always between $2.1 and $2.6 billion under management. Depends a bit on the Bitcoin and crypto prices. But I think what's more important than our assets under management is the breadth of solutions we can offer, with more than 29 products nowadays already listed on the Swiss stock exchanges, be it single currencies, be it single cryptocurrencies, be it baskets or indices. So a very broad possibility to invest into crypto. And afterwards, after this day, if some of you decide crypto is a way to go for, and I need it in my asset allocation, why not looking into ETPs? As really an efficient and liquid instrument of doing so. We're a Swiss company, which is, I think, also interesting and important. And just a background why we are a Swiss company is because our founders, Hani Rashwan and Ophelia Snyder, when they founded the company more than 3 years ago, they were looking into more than 20 jurisdictions of where can they issue or where can they structure solutions to invest into cryptocurrencies in a way that is regulated and in a way that is really tailor-made for institutional and regulated investors. And then Switzerland was really the go-to place, and that's the reason why we're here today. And I think we're all very happy being here in such a really, I wouldn't say crypto-native country, but such an open society, and also from a regulatory perspective, really a place where crypto is really well in demand. I'm personally not Swiss, I'm Austrian, but it's not so far. So for me, it was an easy transition. But let's come to our topic. Time is flying. I only have more or less 15 minutes here. If you are an institutional investor, a private investor, and you are invested into traditional asset classes, and you look at crypto, what are you doing? And I think an important argument for us is, I look at the correlation. Does it add value if I add cryptocurrencies into my existing portfolio? And as you can see, there's a certain remit from a correlation perspective when you compare it. I hope you can see, but it's a bit small. But if you compare cryptocurrencies to, let's say, other equities, tech equities, SPY, that's the S&P 500 ETF, or even global bonds or gold, there's a certain correlation aspect and added value for if you look at a diversified portfolio. Clearly, we could add some other crypto underlyings there as well. Like we heard before, there are thousands of crypto underlyings, but I think with Bitcoin and Ethereum as the largest ones and the ones that usually the first steps into crypto by many investors. We put those two up here, and we have more detailed analysis on that. So in hindsight, after the presentation, if you want more details, we can discuss that as well. So I think the correlation aspect is really important, that it adds value to your portfolio. But as an investor, you not only look at the return potential. I think risk is very important as well. And I just had a brief conversation before with my predecessor who is holding a presentation afterwards, who told me, yeah, but risk is also important in any kind of investment. And as an investor, when you look at risk, obviously you might look at the Sharpe Ratio, which shows you the excess return to the risk-free rate per additional unit of risk measured by volatility in this case. And as you can see, Bitcoin, when you compare it with US equities, with gold, or with bonds, in this case US bonds, there's a superior Sharpe Ratio. It's put like that. From a Sharpe Ratio, from a risk perspective, it makes sense to invest or add part of your portfolio into crypto because you can improve the Sharpe Ratio. Clearly, what you have to live with when you invest into crypto is a heightened volatility, and you have larger drawdowns. We also do regularly drawdown analysis especially for our institutional clients. And as a caveat, you have to live with certain drawdowns when you invest in cryptocurrencies. But I think everybody is aware of that because you see it on a daily basis when you look at the performances. So overall, a lot of arguments, in our opinion, why cryptocurrencies should be part of a well-diversified portfolio. I also want you to look at where crypto stands when you compare to other asset classes in terms of size, because it's always interesting. Does it really remit to invest in a certain underlying? And as you can see, if you compare it to global real estate markets, equities, or even gold, it's still early days with Bitcoin, especially, or with crypto in general. 2.1 trillion, that's the whole crypto market cap out there. And it's less than Apple. So I think when you look at that chart, it shows you it's early days. But the other question is, as an investor, do you want to be part of something that develops further at an early stage already? And obviously the expected growth rates are quite significant, and you can think about crypto when you compare it, or it's often compared to the internet, right? And I skipped the next slide, but if you look at this slide, I think that's very striking. In 2021, there were approximately 100 million crypto users. And guess what? In 1997, there were 100 million internet users on this planet. Nowadays, there are 4.6 billion internet users, probably, as we speak, even higher, because even that number is growing. And like I said, there are many experts, industry participants, observers who compare the growth potential of crypto assets to the internet. And if you believe in that, I think show me an investor who doesn't want to be part of such a growth story, at least with a very small proportion of a portfolio. I'm not recommending putting 10 or 20% of an institutional investor's portfolio, especially into crypto. But if you put part of your portfolio into crypto, it should be a worthwhile exercise looking at those numbers. And the slide I just skipped. Not sure it's possible to read, but it shows you. It compares the market cap of Bitcoin, of Ethereum, with the largest stocks out there, and also with commodities. And as you can see, Bitcoin is among the top 10, has a bit of a larger market cap than Berkshire Hathaway. Ethereum is among the top 30, close to Palladium and SPY, which is the largest equity ETF existing on this planet, which shows you if you want to, I think they're in the mix of being an eligible asset class when it comes to individual product size. And this is only a snapshot. Obviously, it's quite volatile, but so are equities. So something we think should be part of a diversified portfolio. And when we discuss with clients, obviously, many of our investors who are usually more wealth and intermediary clients, investors, it's less asset owners like pension funds or insurance companies. I think it's a bit early for them. We receive a lot of feedback that we are not invested yet, but we are looking into it. And I think by the day, and Sina probably can confirm that, who is talking on a daily basis to all our Swiss investors, by the day, we receive more and more demand from clients to invest into our products. And as you can see on this slide here, the current asset allocation, and we're looking here at individuals that are worth more than $30 million, is again, similarly to the overall market size of crypto, still quite low. And I think it makes perfectly sense if you look at the market size of the other asset classes. But still 1% of individuals are using cryptos. I think this number probably is already a bit higher, because I think the analysis there, or the statistics are from end of last year. But again, you can see if the adoption grows in crypto, there should be also some positive price momentum from that side. And if you look at gold, for instance, and other precious metals, it's already at 3% in global investors, private investors, I must say, asset allocation. So I have 4 minutes left. I wanted to briefly also touch upon an efficient way of investing into cryptocurrencies. We don't see ourselves as a pure asset manager, I must say. I'm not crypto native, as you heard. I was at State Street before, but we have fantastic people in the firm who, from a research perspective, look into the crypto market on a daily basis. And I'm not here to sell you our products. I'm really here also to let you know that we want to act as kind of knowledge transfer agents. So if you have any questions around crypto, DeFi, blockchain, our research team and our team that has been in the industry for many, many years is happy to engage with you in a dialogue, even if you're not immediately investing in our product. Because I think we think education is really key, and this is something we want to offer to the market, and I think we're doing that in a really nice and good way. But obviously we have solutions. We're not the only ones out there, but I mentioned we're an ETP provider. That's a bit of a packed slide full of text, which is, again, probably a bit old-fashioned, as me, coming from a traditional asset management firm. But I look at the next one. So you can see really what we try to do with the ETP structure is offering clients in Europe a way to invest into crypto underlyings in a transparent way, in a liquid way, in an efficient way, and also in an investment way they already feel comfortable with. You all know ETFs most likely, and if you're invested into asset classes, and if you are smart, you go to an exchange here in Switzerland and buy ETFs. You can't do an ETF on single crypto underlyings in Europe for diversification rules. So we need to go down the way to do it via a so-called ETP, an exchange-traded product. And that's exactly the way, these products work exactly the way as already existing gold or precious metals products out there. Ultimately, the difference to ETFs is limited. ETFs really, they are segregated accounts, and ETPs are structured or segregated nodes. Let's put it nodes linked to issued by a segregated SPV, and they don't have ultimately they do not have a credit risk. And similarly to a direct replicated ETF, the crypto underlyings you invested in are always physically backed at 100% in a regulated custody. That's very important. So it's always there at all times. And in case something happens with the issuance vehicle, there's also, you see this on this side, on the bottom, there is a collateral agent who would be responsible and who would take over the underlying. So it's a very secure and safe way And I think it's important that, because it's a regulated way of investing into cryptocurrencies. I don't say that other ways, directly investing into crypto is something you shouldn't consider. I think every investor needs to make up his or her mind. But certain investors, for regulatory reasons, especially on the institutional side, they need to go down the route with a regulated instrument. And like I said, if it's a new asset class for you and you want to invest into it in a vehicle you're already comfortable with, I think the ETP structure is something you should look at. And we're happy to have a discussion on that whenever you need. Your bank, your broker, they're also very much aware of this kind of structure. I see I'm running out of time, so very briefly to finish off with, I just wanted to mention all our partners as well are regulated partners. You see here the stock exchange obviously is regulated, and I think it's very important that our products are listed on a regulated exchange, because the regulated exchanges nowadays, they put an additional quality layer in crypto issuances, because we're not allowed to go out there and just issue any cryptocurrency, right? The exchange looks very much into which kind of underlyings we should issue. The gentleman in the front row is nicking and agreeing, hopefully. So this is just an additional, so that I can talk it. It's just an additional quality layer and should make you comfortable of investing into cryptocurrencies. And also our brokers, market makers are very well known from the ETF business. So this is a really very sound overall structure. We just can recommend everybody to have a look at. Make your own opinion on why crypto should be in your portfolio. Just a couple of ideas and a couple of arguments. I was just lining out in the beginning of the presentation. Happy to continue in the break afterwards, or please come to us via our website if you wanna discuss it. I think my time is over. I don't want to overstretch it. I thank you so much for your time today, and really thank you so much also having me today. Curious already what's coming up next, and wish you a wonderful rest of the afternoon, evening, and looking forward to some drinks and some, I think, finger food afterwards. Thank you so much.